Hello, everyone, and welcome back to another episode of KYB, the series where we interview builders from the Ethereum ecosystem, spotlight them, and get to learn more about them. Today, we're joined by Flo, who is from Ostium, an open source DEX on Arbitrum. Flo, or Chris, welcome.
Thank you. Glad to be here.
Nice to have you. Before we begin, could you give a quick intro and some background on who you are and who we're talking with here?
Yeah, my name's actually Chris, but I go by Flo. That's what I'm known in crypto, the crypto Twitter ecosystem. Yeah, I've been the acting head of marketing and head of BD at Ostium for a little bit over a year now. Originally, my background was in trading, so in prop. From there, I just started trading my own book. I was introduced to crypto actually around the COVID era, when nobody had anything better to do. Everybody was sitting at home just trading. I had like a trading community, and the community there introduced me to crypto, introduced me to DeFi, got me interacting on chain. So ever since then, just kind of jumped both feet in, and I've actually been working now in the space for the past around 4 years now.
Nice. And do you want to also give a quick pitch of what Ostium is before we dive deeper into it?
Yeah, of course, definitely. So at Ostium, what we're trying to do is build crypto's macro trading app. So what that means is the number one place for you to trade not just crypto, but things like indices. So the S&P 500, the NASDAQ, commodities, so gold, silver, oil, platinum, and palladium, all sorts of different metals, FX, so foreign currencies, and really just in the long term, anything that you might want to trade. So into volatility products, bonds, rates, and some unique products that we're actually cooking in the background that we can't quite announce just yet. But so basically, we want to just be the number one place on any chain where you can trade any asset. So that kind of like is what goes behind our motto, which is essentially just trade anything.
Right. And how does I like to typically ask projects that we interview what is unique about them, but I can instantly tell that for myself, at least, that the uniqueness is that you can trade anything on Ostium rather than just on-chain stuff. And I wanted to ask, how does that work? Like under the hood, if I trade Forex on Ostium, how does that actually work?
Right. So our model is a model that, if you've been in DeFi for a while, it's based on something that will be really familiar to you. So it's like the Oracle or pool-based model. So essentially, the prices are fed in through an Oracle-based system. So, if you're familiar with Chainlink, if you're with Redstone, if you're familiar with, other companies like that, our RWA oracles are actually all custom built in-house. So that applies to the RWA. So all RWAs custom built, and then we are actually using for our crypto pairs, Chainlink, low latency on the back end as well, and that kind of like fills out our Oracle stack. And then the pool, so essentially, the LPs in the traditional form of this model, like the very basic form, what you saw in the very early days of DeFi, essentially, there was a liquidity pool, a vault that people deposited into, and that vault was essentially taking the other side of, all the trades that were on the platform. So this works works okay if when you're dealing with primarily crypto assets, which are, they're very high volatility, high variance. Essentially there's a lot of liquidations, and, aside from obviously the main pairs, so, BTC, ETH, now Solana, you generally see a lot of negative drift on these assets. So essentially, crypto being a very skewed long market, generally that's how the basis trade is formed. People short because there's funding to collect on the short side, because just the market in general is very skewed long, right? So basically that works very well in that basic model when that's all you have. But when you have assets like stocks, you have assets like indices, you have these other assets that are more low variance, more positive drift, meaning, in more cases, people can just kind of like sit long and just, basically just sit there and collect money essentially as the asset goes up over time. It gets a little bit more difficult. So as more of these like kind of larger, more positive drift assets got added to, other similar products, what people did is they created a buffer. So it's like the buffer is like a secondary layer that basically becomes the counterparty and protects the LPs. That's usually fed by fees or liquidations. It kind of depends by model. And so in that case, that essentially, unless that buffer is depleted, then essentially the LPs are never taking the other side of trades. So they're put at a lot less risk, right? So that's kind of like the normal Oracle pool-based model that everyone's familiar with. Like GMX utilized this model, Gaines utilized this model for many years now. They provided some of the inspiration for Ostium during the early development phases back in 2022. But essentially, the new thing that we're doing is that brings it closer to a model that is more familiar on the TradFi side in the CFD market, for example, is that we are actually, as opposed to allowing the protocol to essentially be exposed to all this delta exposure, essentially, we're going out and essentially into the underlying market. So whether that's in crypto, oftentimes that's something like Coinbase. In the traditional markets, that's often something more like IBKR, interactive brokers, but essentially go hedging out those deltas in the underlying market through a series of like both linear hedges, and options, and all kinds of different stuff. I won't get too much into here, but essentially, so that the protocol is never really overly exposed to the positions, or taking too much of the opposite side of traders' positions. So it's actually allows us to be a lot more capital efficient. Maybe I've yapped about it a little bit too long already, but it essentially allows us to be a lot more capital efficient, have higher OI caps, list more assets, and things like that, essentially.
That's really cool. Like, I mean, from my personal interest in trading and finance in general in markets, I could sit here and talk hours about it. But I also understand that it can be sometimes very complex or very daunting for listeners. So I wanted to ask why did you decide to build, like typically on-chain perps, they just focus on on-chain stuff like tokens. Where did you get the idea of, hey, let's allow to trade anything on chain?
Right. So actually, I had been trading for a long time already, like I mentioned, and then I got into crypto in 2020, and then after just being in the space for a while and connecting with people, I met the co-founders of Ostium, so Calidora and Marco. So I believe it was at ETH Denver 2022. And so there was this overarching idea, 2022 was kind of the bear market. Everybody was kind of just was feeling the effects of macro in many ways on their crypto portfolios for the first time. A lot of people for the very first time had become so macro pilled, right? So it's basically that because everybody had realized that these things had actual effects on their crypto, the idea was, hey, like people are paying attention to these things now. People are watching FOMC, watching PPI. Like they're going to want to express these views in a way that goes beyond crypto. And that thesis was actually a hot take, through 2022, through 2023. And then now, going into 2024, the thesis kind of started all playing out. The narrative started catching on. People were finally kind of realizing, funnily enough, once assets started coming back up, and these things were, at the time starting to matter, maybe slightly, marginally less at the time, that people were realizing that this is something to pay attention to, and they're realizing that something even bigger than that was that not only was there the opportunity to get all these people who are now macro pilled and already trading on chain to kind of like be interested in a product like this, but you could potentially even go after, the plus 500s, the eToros, the Robinhoods, like these other retail type of platforms, and bring in this huge kind of like retail trading audience that has, something like 80 million monthly active users, drives like $200 trillion in annual volume. And so there's this whole wide world out there that's, there's a large market in crypto for this product, but there's also just this massive market for this product potentially outside of crypto, that's been waiting also for like technological breakthroughs like chain abstraction and other things like that in order to kind of make it accessible to them. So it's like there's a lot of things that were happening at the time that we saw very early that have kind of like finally coalesced now, that it's like, you know, the space is not only technologically like able to provide these things to people, but the demand is now there as well.
And maybe this is a good time if you could just like show us how to use it. Like, what is it? Like, for all those people that are waiting for it in the wild, like, how should they approach it and how should they start using it?
Yeah. You want me to go ahead and share my screen?
Yes, that would be lovely.
Sounds good. So yeah, like when you first, you look us up on Google, you want to trade assets on chain, something like that. This is where you'll probably be introduced to Ostium. This is our landing page. So, it goes over just a little bit about the app itself. Like I mentioned, there's this whole wide world of traders out there, not just crypto traders and that this might have appeal for. So we want to kind of lay out how this might benefit both sides. So, you can kind of go through these tabs and see the benefits of using this as, whether you're a CFD trader, whether you're a crypto trader. See, one of the main things obviously is, the sign up time and the self-custody aspects, things that are kind of like key to crypto. And yeah, once you're ready to kind of go in and start trading, you would go ahead and launch the app. Okay, yeah, I'm on here on the trading screen. The main thing obviously looks very similar to, most other dexes that you're used to interacting with if you're already, are used to using DeFi products. So again, one of the main things here is going to be, kind of like the general information about the asset up here at the top. So, you can obviously see the price action, 24-hour change, the amount of open interest, both open and available on both sides, and of course your funding rate and things like that. So, and then here on the right, again, normal trade form. You can go ahead and put in a trade here, put in the amount of collateral, your selected amount of leverage, and then go and put in a trade. There's obviously quite a few other things you can do here on the website. If you wanted to go ahead and take a look at all the markets that we currently offer, for example, similar to a lot of other websites, we kind of have this heat map. Actually can give you a good idea of like what the market in general is actually doing in these different kind of like asset classes.
I actually have another question about the markets. Like I've seen that, and maybe that's due to your background, but I've seen, for example, in crypto, you've chosen to only have like 3 assets, which is like the majors, Bitcoin, Ethereum, and Solana. Is there like a reason behind that, or is it just that you're going to be adding more pairs as time goes by?
Yeah, that was kind of just an early decision, driven by kind of liquidity and, basically actually kind of like a technical sort of constraints on a technical level. At this point, yeah, we're looking to add more assets. We more than likely will stick to assets that are more so kind of, in that commodity class, L1s, majors. More than likely won't be listing, chasing the new and hot token listings, low market cap token listings, things like that. One thing that, we are looking or pretty excited to list are some of these stocks that are, tied to crypto, like things like MicroStrategy, Coin, Hood, Circle, and things like that. But yeah, it was an early design constraint choice, infrastructure constraint choice. But yeah, we'll be listing a lot more crypto pairs here in the next couple months.
All right, that's great.
So, aside from the Explore page, again, actually, looks like commodities are not doing very good today. Something to note there. And then, of course, like anywhere else you would see, you obviously, most people want to see the leaderboard. Where do you stack up against other traders? So, we have our best trader leaderboard, best trade, so the number one trade, individual trade that people have done, as well as just who's doing the best. As far as the actual overall platform, number one trader. This is something that hops around quite a bit. The number one trader now is not the number one trader last week. This at one point, I think that we before this recent bout of volatility, we had a trader on here that was like, I think he had like $1 million in P&L. So someone got knocked off the leaderboard here very recently. Maybe they were too long there at the top. I'm not sure. Of course, you know, like I mentioned before, the liquidity pool, the vault, obviously something very important to the protocol. So originally, this page used to be much more simplistic, not show as much information, but you know, we iterated over time through community feedback, and you know, now we're kind of just a lot more transparent. You know, we have a lot more information here on the vault page itself. And then another thing is actually these vault interactions are automated now. So if you, for example, had funds, you had a pending withdrawal. Now, once that withdrawal is finished, this withdrawal goes just directly is deposited into your wallet. But you essentially kind of like had to wait till the proper epic, and then you'd have to come and withdraw it manually. So that's something that, you know, we took a lot of feedback in. You know, we had a lot of people that were unfortunately missing their withdrawal kind of like periods, the withdrawal epics. So, you know, we took that feedback seriously, and now pretty much, you know, most of these actual transactions, most of these processes are automated for people. So, you know, you press a button, you know, wait the proper epic, it's withdrawn directly into your wallet, and you don't have to kind of track everything manually. So that was actually one of the major, you know, if you want to call it FUD, right? Things that when people were talking negatively about the platform, that was one of the things. So, you know, it was one of the major things for us to fix. And yeah, I mean, now we haven't had any complaints since. The vault process has become very smooth. So,
while we're on the liquidity side of things, I wanted to ask how does Ostium tackle liquidity, right? Do you just crowdsource it basically with anyone who's willing to put in liquidity to earn a share, or do you also work like with market makers to deepen the liquidity?
Yeah, right now I would say of the liquidity that's currently deposited into the vault, 90% plus is actually retail. So like you said, essentially crowdsourced from regular DeFi users, you know, regular people who are looking for yield across the DeFi ecosystem. A small portion is essentially institutional LPs who, you know, who are investors into the protocol, like, you know, pre-seed and seed. But we haven't taken on any additional institutional LPs or any institutional market makers since the launch of the product over a year ago. So it's essentially, you know, it's primarily all retail money, and you know, we take that very seriously that so many people are trusting us with their funds. And yeah, that's why we've worked to make the vault both more convenient, but also, you know, our design in general is just is extremely secure, you know. And that's unfortunately that's one of the things that made it a little bit inconvenient is, you know, there's waiting periods, and you know, basically where you couldn't withdraw you know, during certain periods, like for example, when the P&L settled and you know, and everything was recalculated for the liquidity pool token, so that people couldn't like front run essentially the P&Ls of like the protocol, right, and withdraw like right if things were about to go down, you know, they'd withdraw their money, or if, you know, things were about to go up, you could just put, you know, you put your money in immediately, and it just creates like this it's actually, you know, somewhat of a design flaw in many protocols at these days that could allow that allows certain attack vectors that a system like ours prevents, you know. So it would be very hard for someone to drain our pool, essentially, and that's kind of the main goal, is, you know, is to be as secure as possible with people's funds.
All right. And when it comes to TVL, I know that you've had rather impressive growth in like last quarter, I think, like April going forward, I think. And I wanted to basically discuss a little bit that and see what do you attribute that to?
Yeah. So I think we peaked out at around 65 million TVL. And now I think we're hovering, you know, we are hovering or oscillating between 40 and 45 million. So to be quite honest with you, it's much more healthy for us. We had a huge surge in attention, a huge surge in TVLs, and you know, it kind of is one of those situations where TVLs scaled a lot faster than volumes and fees. So it was actually, you know, the vault was underperforming for a while, just because, again, it was like one of those situations where we actually we're less capital efficient, with that many deposits. So over time, that amount has evened out. The protocol is operating much more capital efficient now. At this time, we're actually more towards the levels of TVL that are actually healthy with our levels of volume right now, which have allowed us to, I think recently we've reached levels of like 50%, right, APYs, I think, and around 30% was where we were hovering at for a while. Our collateralization ratio is healthy, now over 100%. So as far as like the actual like reason for the boom, like why we saw so much attention right away, I think honestly it was a combination of timing, both coincidental and planned. Obviously we're a macro trading app, right? We want to be the place where people can express their views on macro, through various assets, through the ability to trade anything, right? So this is the year that Trump came into office. He won the presidential election and he came into office this year. So just like last cycle, just like last Trump won, the markets, when you're going through tariff wars, and you have all these other events happening, worldwide, it becomes a very macro driven, very volatile market. So it just so happens that you had events like the tariffs, you had the Iran Israel conflicts, you had the Gaza war. So it just so happened that that all of these volatile events that are happening worldwide translate to people, for better or for worse, right, translates to people wanting to take directional bets on these events, through different assets, like when the kind of like Israel or Middle East conflicts are happening, people tend to want to long gold, they want to long oil. So during April, I believe, was the kind of Liberation Day, right? So when Liberation Day happened, that was a huge turning point for every market, whether it was commodities, whether it was FX, whether it was equities, whether it was crypto. It was just kind of a huge volatility event, so it caused a lot of movement across various markets. So you saw a lot of people who essentially, it was a breakout moment for us, because you saw a lot of people who were introduced to our product the first time, because we were at the time the only place that you could long or short the S&P 500 and NASDAQ on chain. So it's like, if there was a lot of people, oh, it's Liberation Day, and in crypto, there's a lot of both memes and seriousness about you want to be short the United States, short the dollar, right? So it's just like, at the time, there was just like, everyone in crypto was like, how do I short the United States stock market? Like, how do I short the dollar? Like, or how do I go long against the dollar? So it's just like coinciding of like that event. And then we also, after that, during that huge burst of attention, we also launched our points program. So both, like I said, both coincidental things and purposeful timing around these events led to this huge burst of attention. And what ended up happening is that the LP attention at the time, maybe just because of the actual conditions of the market at the time, was a lot higher than the trading attention. And nowadays that's more even. Like we've reached to the point of equilibrium where the amount of LP funds we have deposited in the vault are able to essentially benefit off a great yield, a consistently appreciating OLP price. And yeah, before when we had kind of like the TVL had outgrown that, it had to come to an equilibrium. Like people taking their funds out of the LP, out of the vault, is what allowed yields to go higher, and basically to allow the LP to actually perform how it should be. So it's just one of those things where it outgrew itself a little bit, and now we're operating on a very healthy level. And as we continue to scale volumes, then and yields continue to go up, then the natural way that it usually works is that now more LP funds will start to trickle in as well, and we can start to kind of scale past our old peaks and reach higher numbers later, now that we have a stronger kind of like foundational base of traders.
Yeah, yeah, which makes sense. Right. So if you're done with showing us the protocol, I want to get
I was like, actually, there's so much more I could go through, but really quickly.
yes, yes. If you have more things that you want to show, then please go for it.
Yeah. So this is, again, just really quickly, don't have to go through too much of it, but I did mention that we instituted a point system back in April as well. So again, with leaderboards, your weekly LP and your weekly trading leaderboards, you have more of a general leaderboard as well, telling you how much points that you're actually earning. So, won't go into, what points might end up later and how they'll benefit the community, but they will benefit the community. And then just the last thing would just be referrals. So one thing that we did recently just institute is an affiliate program. So you benefit from referring people now, but what we now allow people to do is, as you scale up in tier, as you refer more people, your benefits, your points, bonuses go up, and then everyone that you referred, so all your referees, they get more points as well. So we created this feedback loop, where everybody can benefit from doing more volume and referring more people. And then, yeah, that's pretty much it. Well, there's obviously more to do in here as well, but people can discover that stuff on their own.
All right, perfect. All right, so you can stop sharing your screen if you want. And I wanted to ask, so you built Ostium on Arbitrum. So I want to take a little deviation from more finance related talk and talk a little bit about the tech. So my question is, what led you to build on Arbitrum?
This is a question we get a lot, especially nowadays, maybe for people who haven't been in the space as long, right? Arbitrum over, the course of years, when the L2 ecosystem first started being built out, made itself very clearly the home for DeFi, as far as like the most protocols, the highest TVL, DeFi TVLs, like Arbitrum has always been really a place where DeFi is always called home, and that there's been a majority of TVL, if at times not volumes. I won't make any comments on that, on other chains and other things like that, but the sticky TVL, the sticky capital where people wanted to actually have their money, has always been on Ethereum, obviously primarily, but then also for DeFi has been on Arbitrum. So that's the like initial reason, the beginning reason why it was chosen. Ostium was built on Arbitrum. The reason now that we've stayed there, and that we haven't felt the need to expand to other chains, really is just the level of support that they provide. So full disclosure, it was a little bit more different, let's say a year ago, to work with the foundation, maybe a little bit more difficult, but whatever the change was, is that something amazing happened on the internally with the Arbitrum Foundation. They became a lot more supportive, a lot easier to work with, more willing to amplify community kind of like content, with less kind of like restrictive guardrails, and the level of just community support, not just for us included, but also just grant support for the ecosystem, just everything that they've been doing over the last year, and especially over the last 6 to 8 months has given us every reason to have faith in the fact that they'll continue to be at the forefront of the DeFi kind of movement ecosystem. I mean, including the announcement that was just made in tandem with Robinhood, that Robinhood is going to be building, using the Orbit stack for their native L2. So yeah, just everything that they built a home for DeFi in the past, and maintained that over the course of both bull and bear markets. They've revamped everything recently, both on the community side, on the marketing side, BD side, and that gives us the faith to continue to keep our product there. If our product scales to the point where we need our own kind of like infrastructure or something like that, we would probably use the Arbitrum stack as well. Like there's everything they've done and continue to do has been a reason to continue to stay within the Arbitrum ecosystem and on the Arbitrum stack so far. So.
And you mentioned that you received a lot of support. So what is the most valuable support for you as a builder? Like what is the most important thing for builder to be able to grow?
So, especially when it comes to the infrastructure side, and especially what they provide, is just essentially the actual openness and the like the what is it, the approachableness. Like you can actually get a hold of the team is very important. So the ability to actually, like, if we need something, if we are having issues with our the uptime with our subgraph or something, if we are, the keepers, or we're having problems with keepers or something, they're always willing to kind of like provide the bridge and the conduit in order to kind of like make either, whether it's make a new relationship or kind of like reorganize a current relationship within their ecosystem. So that's kind of like been really important, is the ability to kind of help us be adaptive and fill in the gaps for performance, uptime, and things like that. So it's and also just on a distribution level, both on socials or on external blog or internal and external blogs, things like that has also been great for us as well. Arbitrum is a huge ecosystem. We do our own marketing obviously as well, but to get access to like their entire ecosystem, it would be hard without their kind of like support on the marketing and social side. So one thing that was great that they did with us recently was not just us, but with other protocols as well, was there was a whole week that was dedicated to Ostium, both showcasing our product, releasing kind of like blogs that went in case studies that went into detail about our product and the recent performance and and giving more details just about what we're building, and just I would say just overall, so full suite of support, from the technical level if we'd need something on that level, to any sort of BD, to just marketing on socials, and just like a full suite of support. And again, like this is this might be news to maybe if you were working with the team maybe a couple years ago, but it's just like there's been an amazing pivot. So that's been the most important thing that has kept us there as well.
This is great to hear. And did you also interact with DAO governance, with Arbitrum DAO?
Me personally, I've interacted mostly with people from the foundation. I think that's a little bit different, right? So it's been mostly foundation that I've interacted with personally, to be honest with you.
Okay, and I have a question regarding if the DAO could support you in any way, what should that be? Like, is there anything else that you would need, for example, from the DAO, from the community, to help you? Like, what is the wish list if you could make one?
I think that really just creating like on-chain discovery and incentive systems, like things that more so just a distribution level. I think that one of the main things is that crypto becomes very sequestered within its own like echo chambers and bubbles. So it's like you can have a good community, you can have 50,000 followers on Twitter, you can be connected to certain like, for example, just the like perp trading ecosystem within like that like bubble. But there might be people who aren't necessarily, maybe you're a DAO guy, maybe you're a DeFi guy, and you trade on the side. You would actually never see, and like you might never discover us. So it's actually, I think more so just with DAOs and kind of like the DeFi side, just maybe bridging the gap more like directly to like different types of products and ecosystems, just because it's not even something with the way you guys do things. It's just the algorithms that they've created just kind of like put everyone in these very separated bubbles, where it's just like, again, like if we want people who are interested in DeFi, who might not be just like you're every day you're on the charts, you're watching the 1 minute chart type of perp trader. We want those people still within our ecosystem, whether it's as LPs, maybe they're taking like more long tail bets. Those are still users, those are still people we want to be aware of us, and that probably aren't at this point. So it's like, I think that from a community perspective, both just like a distribution awareness, and then maybe just working with us and obviously not just us, but anybody, to like maybe have like community incentive systems and just be more involved directly with the DAO. Because like I said, I mean, I'm obviously aware that DAO exists, but for the most part, I think I've maybe interacted with only a couple delegates, of the DAO, even being like one of the larger projects on Arbitrum. So
I'm very curious because you're the first guest, both as like an individual and also as a project, that hasn't had like real involvement with DAOs, right? Like most of the guests that we've brought on, we've had previous encounters through the different DAOs we participate. So I think it's super important to look, allow me to like pick your brain a little bit more, because I think there's definitely some valuable insights to be learned there, especially for us. And I'm wondering, is there like I'm not exactly even sure how to frame this question. I think there is value for builders such as yourself in the different DAOs, in your case, in like Arbitrum DAO, but I'm not exactly sure as to why either you don't like participate. Is it just because you are not aware of the opportunities that exist? Is it because there's not, it's more of a trouble to talk to, like Foundation? I assume you have like your channels that you reach out to them, specific people that you talk to. Whereas in DAOs, it tends to be more chaotic. Like, what is the reason behind like not being so fully like aware of what's happening in the DAO, or seizing the opportunities that might exist?
Yeah, I think it's just a lack of established channels. Like you mentioned, we have multiple kind of like established channels of communication with the Foundation. We, like you said, what the word you use for it, chaotic, is I would just a little bit more individualized, right? It's like I've talked, like I said, I've talked to a couple other delegates, but it's just like more of an individual kind of like conversation, less so about like the DAO itself, and more so just about maybe how on an individual level they might be able to help us out or something like that, which is good. It's decentralized. That's how it's supposed to be to a certain degree. But I would guess it's more so just communication channels primarily. And then for me personally, I was honestly more involved in DAO activities in the past. Like now I'm one of those guys who's in the other echo chamber, in the bubble. And that's kind of like what inspired like that train of thought, is more so just the fact that things that I was very interested in, and still have some interest in, in my earlier kind of like crypto DeFi career, I never see these things anymore come across my timeline or anything. It's just, like I said, it's just the algo, whatever it is, just puts you in a bubble and doesn't let you out. Like I never see anything about just like the other DeFi topics that I used to before. So now that I'm in the trading world, it's all perp traders, or it's like I don't even see anything about LPing and different yield opportunities. It's a weird thing. So it's like we can all, I guess, it's more so of just like, again, it's an infrastructure thing that we have to like work around and create better awareness around, since again, like not to mention any names, but Twitter X has become a little bit of a harder distribution path with the way things have developed over the past couple of years.
Mm-hmm. All right, and is there? I don't mean to put you on the spot, so excuse my question, but I think it's like I'm super interested. Is there in your mind, like top of mind, any way that this chaotic nature of DAOs and the relationship with DAOs could change? Like, do you think off the top of your head that there could be something to be done there that would make your relationship as a protocol with the Arbitrum DAO more like something like easier to happen?
Yeah, I mean, it could be simple as something like, as I said, opening up a like line of communication with the DAO that had like a few, obviously people that we've talked to before, and new people that we haven't before, and just like essentially something as simple. These are honestly some of the biggest deals in crypto, and now we've seen in the U.S. government have been done via group chat. So it can be something as simple as just having a group chat where there's a bunch of interested parties, like DAO delegates, people that are interested, particularly in Ostium, where we could, both back and forth to share new information, or share, kind of like share important developments that would, might be of interest to both of us. So
yeah, like a person to talk to, basically.
Yeah, just basically a person to talk to, like a representative essentially, where it's like they either, you know, they know what's going on internally and they're able to kind of like be the conduit, you know, be that interpreter for the DAO, and kind of like the projects within the ecosystem. Definitely.
Okay, that's super interesting.
Yeah, we're heading towards the end of this podcast, but before we end, I would like to ask, like, what is the future for Ostium? Like, where do you want to be in a year from now, let's say?
A year from now, we want to be, like I said, not just crypto's premier macro trading app. We want to be right there next to the eToros and the plus 500s, and, you know, and Robinhoods, where, you know, we have hundreds of thousands, millions of people who've downloaded our app from the App Store, the iOS App Store, the Play Store, and they're degen leverage trading on 100x, the NASDAQ and the S&P 500 and gold and Bitcoin and ETH and everything essentially side by side. That's the long tail. And I think that, you know, if we are able to execute right, that's the realistic goal for us. That's something that we're working actively towards. You know, along that path comes listing a ton of new assets. Obviously, you know, we have, I think, still under 30 markets now. We you know, that needs to be into the hundreds even, to really, you know, be able to provide all the markets that people need. So, you know, I would say within the next year, maybe 2 years, is just to have a ton of new assets. You know, let's just say 50 plus into, you know, maybe 100 assets. We want to have our apps fully deployed, and being used by, you know, thousands, if not millions of people. That's what we're looking at. We're not looking to be, and I think I kind of alluded to this in the beginning. We're not looking to be limited to just the crypto ecosystem. Like, that's the rails that we're going to use. That's the tech stack. You know, that's where everything happens. But in the same way, in, you know, whether you want to call it Web 2 or just, you know, in traditional finance, you know, that's not the stuff that people need to worry about. You know, we want it to be the same with Ostium as well, where it's just like you are able to just log in, or, you know, start trading, you know, deposit your funds, whether it's you want to connect your wallet, whether you want to do an ACH transfer, a wire, you know, Boomer, you know, banking system, and you want to send in your funds like that. You want to do a credit card, you want to transfer from Solana, you want to transfer from a different chain, like essentially just making it so, you know, any asset, you know, fund your funds from any chain, anywhere, you know, basically just like the app where you can just, like, you don't have to leave it in order to trade all the things you want to trade in the way you want to trade them, essentially.
All right, I'm really crossing our fingers for you. And one thing we like to like we thought of doing with Christoph is coming back to the projects that we talked to in these episodes in a couple months or a year, and seeing how they've fared, right, relative to where they were when we first recorded the episode. So hopefully we can come back to this discussion in a couple of months, and that you've made progress towards that goal.
Yeah, looking forward to it. Definitely. I'll send you guys updates in the meantime, you know, on our progress for sure.
Right. Before we wrap up, is there any last remarks or anything like a call to action that you'd like to make?
No, I just want to say, you know, thank you guys for giving me time, bringing me up here. You know, it was a great conversation. Thank you for letting me yap here for a little bit. And yeah, look forward to, you know, coming on again in a couple months, or, you know, in however long it is, and, you know, seeing where we're at and seeing how my what I've said matches up to what we've been able to execute. So yeah, that's about it. You know, go on if you're listening to this, if you're watching this, go on, trade on Ostium, you know, ostium.io, ostium.app. And yeah, let us know what you think. Our DMs are open. We respond to them. So I would love any feedback, suggestions, etc.
Perfect. Well, Chris, Flo, thank you for being here. Christoph, thank you for co-hosting as always. And to everyone listening, see you in the next one.